90% of life is showing up. And I showed up too. And I ordered a hot chocolate, still remember. And I didn't drink coffee at the time. Now I drink coffee. Horrible habit. Don't start. And during that meeting, he said two things that were different than other companies. And one thing one other thing that was you could tell that he knew who he was, but also that he was willing to take advice, which is a good sign. The first thing he said is, at some point, the world will be on one financial infrastructure.
Adam, how are you? Thank you very much for accepting our call.
Thanks for having me, Barack. I'm excited to talk to you about anything to do with venture capital or startups or deep technology.
I would like to ask you, if you could advise your younger self, would you suggest pursuing a venture capital right away or trying to first become the professional tennis player? Why?
Great. So first, I'll give a quick intro. So I am the founder and managing director of Boost VC. Run the first check into deep tech startups. So we're a pre-seed deep tech venture fund. My investment career started, I was the first investor in Coinbase, Benchling, Amplitude. In my first 26 startups, I had about 20% of them become billion-dollar startups. But additionally, my great-grandfather was a venture capitalist, my grandfather was a venture capitalist, and my dad is a venture capitalist, as well as my sister and my brother. So I'm kind of in the family business. But my answer to you, so giving that context of having been around this for ever, I'm going to answer that question the same way that. Do you know who Kobe Bryant is or Michael Jordan,
Sure.
Basketball players? So there's one time that Kobe Bryant called up Michael Jordan, and he was asking about his daughter who was trying to play basketball, and he was saying, "Hey, Michael, she's 11, turning 12. Like at that age, what were you doing in order to become the greatest basketball player of all time?" And he said, and Michael Jordan said, "I don't know if I'm going to be much help here. I wanted to be a baseball player." And I think that's like what happens. Like you have to do a lot of little things in order to find the place where you thrive, and where you are sort of appreciated for your weirdness. My advice, I'd probably have a lot of advice for myself, like buy more Bitcoin. But other than like general funny historical things, I think I would mostly be just saying like go for it in everything. So like whatever it is, go for it all in. I never did great when it was like school where you have to be good at 7 different things. But when it was be good at one thing, I was very good at it. So if it was like all in on one thing. So tennis for me was an example of me going all in on one thing. And I got good at tennis, and that was a really big part of my life. So I think I would just say I would probably say like go for it in tennis, because I ended up taking a year off between high school and college. It became a very defining growth year for me personally. It was a big decision where I was taking a big chance on myself, and it turns out anytime you take a risk on yourself, it's worth it even if you fail. And so I've never considered that you're a failure. I think it would push me in the right direction, but I am not currently a professional tennis player, so in that way it didn't work out. I think I became very good at I became pretty good at a lot of things by going all in on one, and I think that was very useful for later in life. So I don't think I would have been as good if I just was like be good at venture capital. I don't think I would have been as good as I am if I hadn't tried myself at a couple other things first.
Why did you stop playing tennis?
Great. That is a hard and emotional decision for any person. Well, I still play. I picked up my sticks again, but I dropped them for probably over 5-10 years. I stopped playing because it became work. Like it became when I was younger, it was just I was doing it and I was competing because of the joy of doing it. And when I was even training every hour when I was in Australia, like I was doing it because I enjoyed it. I wanted to push myself and I wanted to come up with my own curriculum for how to be better. In college, they want you to be a great student and athlete and have friends. Actually, they're okay with you not having as many friends. And so I ended up not finding the joy in it as much anymore because your time gets strapped. You become stressed out about a bunch of different pieces of your life. And I also got injured, and that injury made me sort of have to make a decision about where I wanted my future, my like what I wanted to be doing, kind of thing. And I was sort of enjoying exploring college more than I was enjoying specifically my career.
You also started with entrepreneurship career before VC. Which one is enjoyable, being a VC or being an entrepreneurship?
I mean, I think Boost VC is my startup still. So I still think of everything that we do strategically. I think about marketing. I think about like it's my organism in which I scratch my entrepreneurial itch, but I also am mostly. I mean, I'm on the venture side. I'm not going to pretend that like anyone who's taking a chance on themselves deserves the utmost respect as an entrepreneur. It's a long and difficult road. I mean, my entrepreneurial journey, geez, I've just, it's always about just doing things. Like, I don't know if I think entrepreneurism isn't necessarily about even making the money, but it's about solving people's problems. And like, my first job was, I was a tennis counselor, and it was young. I was like 10, 11, 12, 13. Like every summer for 10 years, I was a tennis counselor. And so tennis followed me in my life. So that was probably why I ended up trying to be a tennis player. But I also had other duties. And then I was a telemarketer one summer. I was an intern for a bank one summer. I ended up being a telemarketer again for a comic book company. Comic books followed me throughout my life a lot too. So I'd say the thing that there are a couple things that drive me, and sorry, I got a big old piece of croissant on me. There are a couple things that drive me, and one of them, I'm just like very, very curious about how the world works, and so I'm just constantly trying to figure out what the structure of the universe is, and that drives a lot of investments where it's just like, hey, I believe this, but the rest of the world believes this. Like, where could I be investing for that? And then and so I think which one's more joyful. I mean, my first real company was called Expert Financial. It was a secondary market for private securities, and that was where I learned that we made a lot of mistakes, but I learned you want to work with people you love, and like I loved working with those people. They were fantastic humans. I'm still friends with all of them. I was lucky to have an amazing team. They've all gone on to do amazing things individually. It was a good incubator of talent at Expert Financial, but the company itself didn't work. Boost VC was actually my iteration of essentially what I felt we were doing wrong there. The first thing that we launched at Boost VC was a crowdfunding website for early stage startups, and that what we realized was people weren't people wanted the first check. They wanted an investment. They didn't care about the crowdfunding service of it. They just wanted money. And we were like, well, we could solve that, and we could also build out a network and help them with experiential advice. And so my partner and I ended up moving from quickly pivoting from a crowdfunding website to a fund. And from there on, like we just kept doing this because it was something maybe we innately understood. We just really have always known that the founder is the hero, and we like helping them. People come into my office and they basically say, I believe this is the biggest problem that the world's ever seen. I'm going to spend the next 10 years trying to solve it. And like, I'm pretty optimistic because that's my entire job. Like all I do is I look at a founder who is telling me that the world is going to be better tomorrow because they are solving this problem. And I'm like, yes, do it. That sounds great. Like, yeah, and sometimes I can be useful. And so when I'm useful, we try to invest.
You mentioned about the comic book, so I wanted to go back. If you could spend a day hanging out with any Marvel or a DC superhero, who would you choose and what would you do?
It's a great question. So I'm I'll flip it on its head a little bit and just say like the creator Stan Lee is the guy I would want to hang out with. He passed away a couple years ago, but I was fortunate. I ended up getting to meet him, and it's sort of one of those serendipitous events where I was fundraising and I ran into someone who was on his foundation board. And I said, "Oh, that's crazy. Stan Lee he's one of two people I want to meet. It's on my list." And she said, "Well, you should probably hurry up. He's 94 or whatever." And I was like, "You're right." And I was like, "Could you help me?" And she's like, "Yeah, I can help you. He married us. We're great friends." Um, and she was like, first off, her name's Holly Cow, and she's like an incredible human because not many people follow through with stuff like that. And she set up this 2-hour lunch where it was me and I invited my dad, who also loves superheroes, to just hang with Stan Lee, and we just got to ask him all these crazy, awesome questions. So I admire sort of world creators, and I think Stan Lee is like the ultimate, like character and world creators. And and I think that's also why I love, venture capital. Like this person's coming into my office and is like, "Hey, my superpower is X, and I'm gonna use it for good to solve the biggest problem I think exists." And like I go, "Okay, that's great. Like that's fantastic. Like I want to be a part of that because I believe you. Like that's fantastic." So comic book wise, but if I had to choose, actual superhero, it would be a tie between Spider-Man and Iron Man, and I think Iron Man would be really fun. But Spider-Man, I grew up on Spider-Man, so like it's hard for me not to say Spider-Man.
What
Yeah,
questions should you ask to Iron Man about being a superhero?
I'd ask probably what drives him about being a superhero. What gets you to get up in the morning and put on that suit and go save people, right? Like there's some sort of battery power source. Who does he confide in? Like I would want to know like where his trusted network is of like people who he actually sort of trusts enough to know exactly who he is and like all that stuff. And then probably ask him a lot. He runs a really big company. I'd probably ask him a lot about questions around how Stark Industry is built, and just like how do you define the mission for a big company like that? How do you push that? I think he'd be pretty good at answering sort of like business guidance questions.
So back to the investment topic. When you are evaluating the potential investments, do you rely on quantitative data or metrics or gut feel intuition? What factors drive your decision-making process?
Yeah, so I think everyone uses. Okay, I'm gonna separate the two a little bit, but like I am a person investor, so I invest in people straight up. Like I am not technical, so I don't have. I have the ability to perceive the problems or the technology that someone describes to me, but I am not personally a developer or a builder, and I admire all who have like crafted their abilities around that. And so my job is actually not to test whether or not someone has a specific ability to build. My job is to trust that they can and believe them that they can, but also assess whether I believe that they believe they can. And so all my questions that I ask are really geared towards, do they know themselves well enough to build a great company? I think self-understanding is a really important part, an untold part of building a startup. And then also, do they default to movement? There's some people who are really good thinkers, but they aren't good doers, and you need a good healthy balance of the two. So I'm attempting to figure out those two pieces. Um, but does data drive any of my decision making? So I invest when the company is like two people and a dog, you know, like if super early, not they've maybe have an idea. Sometimes the idea changes a couple times even after we've invested. and, but in the question of whether or not data drives decision making, I would say where data is the most important to me is not about the data of whether or not the company's doing well. So whether or not there's a like metric growth of anything. But for me, a big part of it is, do I believe in the market they're building in? Like, do I believe that what they are building in is a very, very important market? To water. Okay, I believe water is important, right? Like water is an important thing. Do I believe that these people are asymmetrically built to build a water company? Maybe. And so, but the data for decision making for me is like trying to assess whether or not something's important or not. And I want to spend all my time. There are a lot of ways to make money in this world, like tons of ways to make money, and build great businesses. I believe everyone's got a good business in them. But where I want to spend my time are on businesses that I believe have a level of importance that it would impact the entire world if they succeeded. And there are a lot of businesses that don't hit that. And it's not that that's a worse company for it. It's that it's not for me. Like it's not in my useful or important bucket. And that's where I believe that I'm asymmetrically helpful also because I'm really good when there's no roadmap. So I can help a company achieve certainty and clarity when there's no roadmap. And I like doing that.
What was your first investment? How did you decide to make it?
Oh my gosh. I mean, other than like when I was a kid and my dad used to have us, he wanted to teach us how like companies worked and stock worked. And so he would say, you can look at all the companies on every morning. We would look at the newspaper and the stock prices in the newspaper. And he'd be like, okay, you get $5. I think it was $5 a month or $5 a week in order to buy any stock. And so we ended up starting to understand that stock was owning a piece of the company and you were able to actually own a piece of the company. So that might have been my first real investing, where I started to fathom the idea of how companies worked. However, my first angel investment, where I made a conscious decision to invest in a very early stage company, was a company called Path. And it was a mobile photo sharing app, like Instagram. Actually, it was Path and Instagram at one point were sort of very in the competitive realm of one another. It was started by the guy, his name was Sean Fanning, who I admire very much because I spent so much time using his first product, which was called Napster. And it was a peer-to-peer file sharing service for music. And so I was able to like download and listen to any music. I mean, not that I used it because it became illegal, but like I was at the age range where I like used it. And it taught me so much about computers, and it taught me so much just about how products worked. And I started to be able to use almost any product because Napster was not easy to use, but it was very useful once you got in. And so I started to be able to like figure out how all products were essentially built. And it was so important to me. And so when I heard Sean Fanning was fundraising, and I actually got to meet him with my dad. So my dad and I got to look at this deal together. He pitched us. And it was him and Dave Morton wasn't there. Sean Fanning was pitching, and he at the end of the meeting, he could have literally said anything, and I would have raised my hand. But he said, "So, would you want to invest?" And my dad's like, thinking about it, and I was like, "I do. I want to invest." And I didn't have that much money, but I was like, I would like to support. Basically, it was blind support of this person who had meant so much to me. Similar to how Stan Lee was important to me for comic books, Sean Fanning got me into computers. And so, like, same concept. I wanted to support these people who had been so important. I'd spent so much time on their visions. And so that ended up being one of the most valuable companies to me, but it did not make me money. So it became so valuable because I learned. I didn't invest in another company for probably a year. So there was a 1-year gap between my first and my second companies. But I learned and I built out, like I showed up to all their events. I went to all their parties. I got to know the ecosystem of startups, like through Path, which was an incredible network to know. And I ended up being I met the founders of Lyft. I met a bunch of founders. I should have invested in Lyft. That would have been a good one. And I met all these incredible humans. And so Path ended up being this micro network of fantastic investors and founders later. They all ended up starting new things. They all went on to do great things. And I got to be a part of it just by investing a little money and meeting with them every once in a while. And I took the chance to I prioritized and made sure that I got to meet them, see them, talk to them anytime I could. And so that was a great learning experience for me about startups.
Beside Lyft, can you share an example of an investment you passed on and regretted later?
Yeah, okay. So I would say if you're going to be an angel investor or a VC, I think no regrets is the best mentality. Knowing and the way I think about it, I will give you one that I missed, but I don't like long-term regret, because you have to think it wasn't a part of my story. It was that one's not. It wasn't for me. That wasn't for me. Even though I saw it, I did. I would have loved it. That type of thing. There are a couple that were, I think I would have done. So Gusto, I would have done. Lyft, I would have done. There's one or two others that I probably would have done. And it was an element of Warren Buffett says, I've lost more money through omission. I didn't push hard enough to get into the deal, rather than I didn't think I wanted to do the deal. So I didn't push hard enough to get into the deal. For those ones. The one where I should have blindly said yes was, so I did invest in Coinbase. However, I didn't really know what Bitcoin was. I was making a bet on this great founder. And after I made the investment, Brian Armstrong called me. And by the way, I recommend every founder call their investor after they close their round, just to say, thank you for being a part of it. It closed, money's in the bank. It meant a lot. And he called me and he said, hey, we're closed. Fantastic. And I'm like, oh, congratulations. And people forget Coinbase, they didn't successfully raise their whole round. So they were raising $1 million or $1.2 million, and they ended up with $500,000, $600,000. And he was still jazzed. He was excited to have it. And then he goes, hey, would you, some of the other investors, and it made it sound like there were a lot of other investors, but there were only 2 other investors than me. And he said some of the other investors are going to buy an equal amount of Bitcoin as you invested in Coinbase. And I was like, I thought about it for a second, and I was like, Brian, by the way, at this time the price of Bitcoin was $10 for Bitcoin, $10, not 10,000, 10. And I'm like, Brian, I just invested a bunch of money in you. Don't ask for more money right now. Let the sale happen, right? And that would have been the probably single greatest investment I could have made, just because there was a huge deviation between the price of Bitcoin and what the reality was at that moment too. It was very undervalued. I think, but to the point of it wasn't a part of my story. I think if I had invested in that, I would have sold it at some point, rather than learning about how Bitcoin worked, getting excited about Bitcoin, doing the whole system. So I'm actually retroactively probably happy I did it. I didn't do it. However, yeah, if you hold. So Bitcoin, the problem with Bitcoin is you can always sell. But if I had held, that would have been the best investment of my career.
Tell us about the first time you met with Brian for the Coinbase story.
Yeah, so I've been very lucky. So if you think about it, so I try to put people back in my position about 12 years ago. I just failed a startup, so I wasn't it wasn't like I was doing amazing. We had just sort of sold our company for parts. It didn't do well, and I left. And I was sort of in between. I hadn't started Boost VC yet. I was sort of figuring out what I was doing, and so I started to reach out to a few startups. And there was a list of startups, and one of the items on it said Coinbase digital currency marketplace. And I didn't know what a digital currency was, and I didn't know that there were enough of them to have a marketplace. And so I was just curious, and so I was like, hey, I had invested, I think, in 1 or 2 other companies at this point. And I emailed Brian just cold, and I said, hey, I think we met, but I wanted to learn more about this digital currency marketplace that you're like building. I don't understand that. And so he shows up and we meet at a place called Red Rock in Mountain View, which I always give credit to because I ended up investing in 4 like billion-dollar companies out of Red Rock. In fact, I don't know why I meet anywhere other than Red Rock. I should just go to Red Rock.
You should invest,
And
Red Rock.
I know. Well, there was a moment I probably could have. I think it's. I don't know who it's owned by now, but maybe I should franchise it and bring it to San Mateo. And I made, and so I talked to. So Brian shows up. To his credit, he showed up to the meeting. 90% of life was showing up, and I showed up too. And I ordered a hot chocolate. Still remember. And I didn't drink coffee at the time. Now I drink coffee. Horrible habit. Don't start. And during that meeting, he said 2 things that were different than other companies. And one thing one other thing that was you could tell that he knew who he was, but also that he was willing to take advice, which is a good sign. The first thing he said is, at some point, the world will be on one financial infrastructure. And so he didn't lead with, I'm starting a Bitcoin exchange. He didn't lead with, I'm doing a crypto NFT, whatever. He said, my goal is to build an infrastructure for the planet. That is my goal for finance. And I was like, oh, that's interesting. Why don't we have that? That seems like a good thing. And we have the internet, so we should have this. Like, this seems like a good thing. And so he got me sort of like, my brain started to go, oh, that's sort of cool. And then the next thing he said is, this could be a $1 trillion opportunity. And I was like, what? Like, I've never heard the word $1 trillion. Like, that's a big number. And he was wrong. Crypto is already a $2 trillion opportunity, so he was incorrect. But that was a wild concept. That was a weird thing. It rung in my ears weird. The thing that he did well that I think is undervalued also was, I was 26 and I had some experience because I'd started a company, but I hadn't succeeded. And I started to throw ideas at him. And, he took all the ideas and he thought about them and then he would respond. And it wasn't saying yes because he thought, hey, I'm an investor and I want to make sure this investor feels good about whatever it is. He would put it through and he'd be like, that won't work because I've tried it, basically. Or the one thing that he does sometimes credit is to say is like, I kept saying like, you need a co-founder. And he's like, I know. And that ended up being like an incredibly important part of the story of Coinbase, was like having Fred Ursham eventually. So I met Brian before there was a Fred. And then they went off and they built this great thing. I am very fortunate to be able to talk about like meeting Brian for the first time. He was the first one to ever tell me about Bitcoin. But in venture, like, look, the things I was good at was I was open to the idea of fundamental global change, right? Like, that was something I was open to, and a lot of people weren't open to that. And on the other side, but me making that decision to invest, and it was after diligence and talking and reading and learning about Bitcoin, I was lucky to be a part of Coinbase. That could have easily been a lot of different people. That could have been a lot of different things. I just happened to be like so naive enough. I was early in my career. I was willing to take a risk on something that was absolutely insane. And I've been so lucky to have been a part of that journey and continue to be a part of that journey. Like Brian and Fred, but Brian, like, I feel is the reason Coinbase is what it is. Like, I wasn't a big part of that story. And that's also where you realize that the entrepreneur is the hero. We get to help during a very specific period of time for that company. I was probably helpful for about a year or two. Even at that, like, Coinbase he's a one-of-one founder. And he's built a $70 billion company, so he can say that now.
Was it an angel check or a VC check?
So I hadn't started Boost VC yet, and so I was still angel investing in companies. It was probably I invested in 20 deals, 25 deals. It was like deal number 7, something like that, of my 25 that I did before I started Boost VC. might have been even earlier. It might have been like my fourth check. And yeah, so it was as an angel I was able to invest in Coinbase. However, Boost VC did end up investing later. So after I started Boost VC, we figured out how to invest in Coinbase again. And that's been, I've been able to, where I think that Coinbase was a little lucky that I stumbled upon it at a very specific time in my life. I believe that it was very high conviction of me to get obsessed with Bitcoin and then I've invested in like 150 crypto related startups at this point. And we've done well on some, and we've learned about the ecosystem. It helped me build a huge network. I'm so thankful for Brian and Coinbase just because it was sort of the starting point for me to like really find my path for what Boost VC became.
Tim Draper invested after you have the angel check.
Oh yeah, my dad was way after me. For the record, I brought it to him. I said you should do this deal. I think it's fascinating, and they ended up saying he was working at DFJ at the time, and it ended up not being a fit. Essentially, my dad did end up doing it at the B or the C, so like a little later. I mean, I'm giving credit. My dad is a notorious crypto person. I'm not gonna but Coinbase was me, so I'm happy about that. And they had done they actually had done a Bitcoin related company before I did Coinbase, but I did Coinbase.
For the investment committees, is it better to get lots of partners to decide this investment decision, or do you trust in one person decision?
Consensus kills everything. Okay, you want non-consensus, and you want partners around you who can think differently than you. I think I'm at a different, I think there's a beginning part of your investor career and a middle and an end. I'm sort of in the transition from beginning to middle. I think I'm at year 13, 14 of early stage investing. And I think I have another 30 years, something like that, of doing this. I feel like I can sort of maintain for another 30, 40 years. And I mean, my dad has, so my whole goal is to outlast him. So whatever it's going to take. And so I think that you want someone who wants to do the deal, but they don't want to do the deal because no one else wants to. They want to do the deal because they want to do the deal. And then the second qualifier is the person needs to know that they want to work with that investment for 10 years. You're getting married after 2 meetings, and you have to be pretty good on judgment of character to understand what that is. And so I think I'm at this point where what I'm assessing for is where am I the most helpful? If it works, does it matter? So if what they're saying is going to work, does it matter? Can they execute on this? And if they can execute, does it fit our business model? And then there's an orb around that structure that is, do I want to work with this person for another 10 years? And do I think that would be valuable to me and them? And when I get through that, and whenever any of the people around the table get through that, that's a pretty good deal. That's a great deal. And we will write that check every time. I think when you start, we've learned that we lose a lot of money when we're all yeah, this makes sense. When everyone around the table is just sort of yeah, it's good. But when it's this is stupid, someone's saying this is stupid and someone's saying this is how the world's going, you want to be backing that deal. So you never want consensus. You always want I want this deal very, very badly. And you want someone to be fighting for it a bit.
How do you balance supporting the founders while also providing the honest feedback?
Well, I think supporting the founders is providing honest feedback. So the way we look at it at Boost, so you can look at it like a garden of flowers. You plant all these seeds, and some percentage of them are going to grow despite you, like weeds. They don't need your water. They don't need your sunlight. They don't need your food. They're going to succeed, and it has nothing to do with you. And you need to know that. Like, I think venture capitalists actually achieve their success for the wrong things often. You need to know that some of those things, like, you were lucky to be a part of those, right? Then there's this group that unfortunately won't work. And they won't work because generally, I would say they didn't have the will to fight, and they really didn't know what it was to be a founder. They're not a founder. There are so many ways to live a great life, and being a founder isn't the only one. So, like, people who are founders are founders. If you're a tourist entrepreneur, like, those don't work that often. But also, sometimes things fail, and it was just timing. Yeah, it's not always like the founder wasn't meant to be a startup founder. Like, sometimes they fail. My first startup failed. I ended up starting a venture fund that worked. And then there's this middle bucket, okay? And that's where we spend all of our time. And it's assessing which companies we can actually have an asymmetric, like, we can give an asymmetric advantage to. And whether that advantage is through capital, network, partnership, like whatever that thing is, that's where we spend most of our time, is figuring out in that middle bucket that we think we can have impact on. And, some people say that venture capitalists don't, like they generally won't make an impact. I've seen us make an impact on outcomes. And like, I feel that that's a very valuable piece. Now, capital is a big part of that, so I'm not going to ignore the fact. And I think people need to know that capital is a big part of why venture capital exists. But helping people when they're down, being a constant champion of an industry, having a network that allows them to be inspired, like, those things add value, even if I can't directly attribute it to anything. And so that's why I'm a VC, is because I believe I can make a positive impact on the outcome of this middle bucket. And the other bucket, hey, I'm happy to be a part of. And I think that's the best way to think about how we support founders. It's we are seeking a good partner on both sides, and sometimes we get it. But it's not programmed, it's not programmable, and we give our best effort to figure out if we are a good partner. And sometimes the money is the best thing that we can give, and that's great. But sometimes it's, friendship when things are down and against you, a network connection at the right moment in time for your fundraise. And like, there are these moments that VCs can have give an asymmetric advantage to. And that's what we were trying to find.
Boost VC started as an accelerator program. How has the accelerator landscape evolved during your career? Have the value propositions changed over time?
Yeah, so one of the reasons we are a higher volume investor than most funds is that we started as an accelerator. And genuinely, people just stopped liking the word accelerator, so we stopped calling it that. We invest, and we have a go-to-market program that we run as Boost VC to help deep tech startups. So we are focused primarily on startups that don't have a playbook on how to go to market, and they don't have a playbook on how to build a big successful company. We bring all those companies together in order for them to have an advantage against the market. And so we started as an accelerator, and we still, I think the soul of what we do is still similar, but outward looking in, we invest larger checks. How the landscape of accelerators has changed, Y Combinator was the first, and they were writing $15,000 checks. And we replicated that because I thought you could do it for deep tech, and we did it for crypto or Bitcoin as our first vertical. And we replicated it, and then we slowly evolved and became something for ourselves, which was we ended up finding an opportunity to invest $500,000 checks so that founders didn't need to raise capital right after demo day or right after. I think if I were to try to summarize like the evolution of what accelerators are, because I know it too well and too nuanced, like I have too much of a nuanced knowledge here. I'd say there are university accelerators, and academia actually tries to foster some sort of innovation now through an accelerator that may or may not add value. I think that there are a couple good ones that have like created great things. And I think a big part of those accelerators are helping you build a first network to leverage for your future being. How Boost VC built ourselves, this is a better way of answering it. How Boost VC built ourselves was we knew that the things that you can give a startup are capital, network, and like being a champion for the company. And the network piece grows so fast if you invest in groups of companies so that they get to know each other and they feel affiliated with each other, that you can scale and essentially build out a business school as a venture fund. And I think that's the only difference between an accelerator and a venture fund. It has nothing to do with the earlier stage stuff. It's like you're investing to create an alumni network rather than individual portfolio companies. And that's how Boost VC has built itself from the beginning. And so it allows us flexibility to scale as an investor.
How has your investment thesis changed over the course of your VC career? Because you started with crypto and also angel checks, but today you are a sci-fi, venture capital, additionally space, ocean, and lots of hardware probably. So how has the thesis changed?
So our thesis actually hasn't changed. The thing that evolves is the market needs words to define things for you to have an image of. So what people call what we do now is deep tech. So we've been doing deep tech for 12 years. My entire angel portfolio was deep tech because it was I invested in the first pair of augmented reality glasses. It was called Virgin Labs. I invested in Coinbase, which was obviously fringe technology. I had an affinity for the thing that no one believed in. So because they just didn't think it was possible. So it's either historic or impossible things is sort of, I would say, my categories. But there are things that are very important that are also popular. And I think Boost VC tries to stay away from things that are important and popular. If they are important and overlooked, that's my bread and butter. I love it. Now, founders, if I run into a founder who is a just assassin founder, like the best of the best, like just incredible, I will invest in them no matter what they are doing. And so that's sort of my criteria. My criteria is this a no-brainer founder? If it's a no-brainer founder, I literally could care less. They could sell hot dogs. They could be selling, poodles. It doesn't matter to me because I know they're going to find their way and they are a one of one founder. That whatever I invest at, it will be worth more in 10 years if they stay to it. Then there's this, I think that the thing I love spending time on is assessing opportunities where really smart people are playing and for some reason no one's watching. And so for me right now, that's things like oceans it's an overlooked category. 95% of communication goes through the ocean. 90% of all shipping and logistics goes through the ocean. It's a very important thing, but it's overlooked. 20% of the daily protein of the average human on the planet eats fish, is fish. So 20% of the protein. So that I think what I love doing is trying to assess what is overlooked but also important, because that means that it's a non-competitive deal. And I don't like competitive deals. It means that there's some piece of you that might be doing it because other people are in. I never want to make a decision to invest because other people are doing that deal. That is the worst reason to make an investment decision. And so we at Boost VC, we try to make the decision for ourselves, whether that's being the lead investor or follower. We do not want to parlay our decision to someone else. And we learned that from experience. You just don't want to. No matter how good the investor is perceived to be, they are taking a similar risk and you might as well fail yourself. Take the shot for you, not for other people. So that would be if I were important and overlooked or no-brainer founders. That's it. And so we've been doing that I've been doing that for 14 years, as Boost VC for 11. But what we were able to invest, the dollar amount has scaled up. And so by the dollar amount scaling up, who we provide that dollar amount to has scaled differently. So we used to write $15,000 checks. Now we write $500,000 checks. That's a completely different world. But the type of founder we like, it's still the same.
Your grandfather has invented the VC industry. If you could change one thing about the VC industry now, what would it be? And why is it that change is important now?
So my great-grandfather, the thing he invented was, so venture technically had been happening, but people would buy full companies. So they would buy, like the Rockefellers would buy Tropicana or whatever, big full purchases. What my grandfather did was he created a GP-LP structure that wanted to only own pieces of the businesses. Now the pieces were big. It was something between 25 and 50% usually, for small amounts of money. But that was the innovation that I think my family was able to sort of bestow. Someone said that to me recently, and that was the thing that clicked, was like venture capital had been done, but for smaller pieces it hadn't. And that was the big innovation. If I were to, my job is to find market inefficiencies, right? Like my job is to find where there's opportunity to accelerate the growth of something that's important in the world, that other people are not looking at, so that I can benefit. And so the world will benefit, but because I looked at it and I said yes and they said no. I think venture is going through an evolutionary change right now on it's almost being an institutionalized asset class, where there are efficiencies. There's market pricing, and so it makes it harder upstream. So later stage funds will have more difficulty, because early stage venture is about optimization of luck. So trying to figure out how to get lucky. Later stage is the optimization of access, to be able to get into a deal that because they already know which deals are the best 5 in the category. They're just trying to win the best deal in that category, at the later stage. So we're trying to figure out like who has the best shot at building an iconic company, but it's at the earliest stages. Anyone who has certainty at the earliest stages hasn't been doing venture very long. And so it's not that I want anything changed. I think it's more important just to understand the lay of the land. I actually like it because earlier stage, because it's optimization of luck and there's no certainty, it's still an art form, but we are competing with a lot more people now. And so the market gets flooded, people get lucky. It's a much more like founder, the powers in the founder's driver's seat. I wish that I could find a higher rate of great partner, and we find a great rate, but like I think true partnership is the scarce asset. Finding like where you have the highest level of trust with the entrepreneur, they have it in you, where you would say something and like you don't need a contract, you don't need it's literally like you have a handshake, you're both good for it, and you do it, right? Like that's what you want. You want that is the highest level of trust. And so I don't know if there's anything specific I would change, is my real answer. Like I think why I chose this game to play is that it's competitive, it's long term, and it takes a creative thinking to figure out how to find and then do deals. And if I wanted to change something about the industry, I would change it. And what's really great is I keep doing it. And Boost VC, we've just been on the cutting edge of like, we were the first fund to ever focus on crypto. We were the first fund to define what deep tech was. We're always on the cutting edge of finding the gaps of innovation. And I think that that's like a secret power we have, where we just constantly are looking at the fringes of what people want.
Where do you see the industry heading in next 5 to 10 years then?
Where are the gaps in the market? Look, it's an asset class of human endeavor. So data will start to be used in different ways. I think there's that great quote that's like, once a measure becomes a target, once a unit of measurement becomes a target, it ceases to be a valuable use of measurement. So like, I think what ends up happening is like, there's going to be one or two funds that figure out how to use data to their advantage, but they'll understand actually why the data works, where everyone else will trying to do the how. Oh, great. One second. And so that would be my thought process. Is it's going to evolve by more money being put into the hands of people who are building things. We're moving towards a creative economy. Everyone will become an entrepreneur of some kind. And I think if you just invest towards that, you'll do very well. So I call it sort of sovereign technology. Crypto is a good example of that. Longevity is a good example of that. You being able to take control of your health, your wellness, your money, your education. And so you being able to take control of those things. And so I think that what ends up happening is more people get funded to build more sovereign technology, which allows for the dissolution of a lot of institutions that are doing poorly of service. And we as humans are going to get a better service. So I just want the end consumer to get the best service they can get.
Adam, thank you very much. It was a great pleasure to talk with you today.
Yeah. Please, if you're starting a company, email me, adam@boost.vc, and read my book, Breakfast with Pops, if you want to learn about venture capital. It's a venture guide to venture capital. No, thank you so much, Barack.
Thank you. Have a great day.
Have a good one.